Hello and welcome, and this is wishing all our viewers a very happy and a prosperous Diwali. Well, joining me on Mahurat Trading, of course, we have a huge guest, a long list that is, because it is Mahurat Trading in commodities as well. And the last year, of course, has been quite a positive one for this asset class as well. So on the board is Mrugang Praranjpe, who's MD and CEO MCX. We also have on the show Jonathan Bharat, who is CEO bharatsbulletin.com. Kunal Shah of Nirmal Bang Commodities also joins us in the studio, and noted numerologist Sanjay Jumani would also tell you on what to put your money in the next year as per the numbers and stars, of course. But Kunal, hi, happy Diwali to you, and let's start with you first. What is your sense when it comes to commodities? Because we have seen quite a cracker of a year, especially when it comes to this asset class, whether it is gold or silver, the base metal prices, the ferrous metals, and even the crude oil prices on fundamentals and charts have been quite on the positive. But let's start with gold and silver, because this week has marked a lot of buying onto this one. The jewelers have been talking about 30 to 40% of a jump up when it comes to buying. What is your sense? People who have bought in on this week, should they hold on, and what kind of gains are we looking for?
Yeah, first of all, wish all viewers very happy Diwali and a very prosperous New Year. Well, as far as commodities, 2014 and 15 was very bad for the asset class. 2016, like you just said, exceptional year. Except apart from the percentage hike, I would say still looks good as an asset class. In fact, it looks better than 2016 for most of the commodities. And coming to the gold and silver, it looks very bullish to me, irrespective of the fact that whether Federal Reserve raises the interest rate or doesn't, irrespective of the fact that Indian demand remain weak or strong. I expect gold and silver outperformance to continue, and I think it is a very good buy at this juncture also. People who have missed the bus, we've seen a correction lately because of expectation of the rate hike from US. These are good levels to go along for gold and silver from the 1 year point of view, and I expect both of them to outperform going forward. So gold, you can again see during the next Diwali levels of $1,380, $1,400, and as far as silver is concerned, $20, $21 again you are likely to see during the next year.
So bullishness is expected to continue when it comes to precious metals. But let's get in another guest, and joining us now is Jonathan Bharat of Bharat Bulletin as well. Jonathan, hi, thank you so much for joining us, and a very happy Diwali to you too. What's your sense really when it comes to the crude oil prices? Because since last Diwali, this is another commodity that has surged quite a bit. The sentiment has improved as well on the conversation of an output cut from producers. Where do you see the prices headed?
Look, I think when you look at it, the oil prices, we are at a very solid point between that $50 and $52 a barrel. Look, a lot of rhetoric's got to certainly flow under the bridge at the moment, but I do see price at the end of the day starting to head higher, probably up through that US $55 a barrel, perhaps a little bit higher.
Kunal, what is your sense? Where do you see the crude oil prices headed now? Because almost everybody is bullish, and $50 per barrel seems to be holding, come what may.
I think yes, it is definitely looking bullish. During the year 2016, you are likely to see oil again going back to levels of $60 for the WTI, 62, 63 for the Brent. And the prime reason for that is, apart from the OPEC production cut, I think the investment in oil and gas sector have declined almost by $350 billion in last 2 years. So that remains the prime reason for us to remain bullish on oil. $60 is coming next year, and on the downside, we don't expect oil to go below $45, $46 on WTI and $48 for the Brent. So whatever downside you see in next 1.5 months, good levels to go along. Oil is heading up during the year 2016.
All right, we hear you. So there are two bullish voices then coming in for crude oil as well. But Jonathan, coming back to you, and there have been lots of bullish voices on the precious metal space as well, whether it has been gold, silver, platinum, diamond. It really has been a buy call on that one. What's your sense? Are you also buying gold at current levels? And if yes, where do you see the prices headed until next Diwali or by the end of this year as well?
Well, I think at the end of the day, let's see what happens with the US dollar and the election. There's quite a few imponderables still out there at the moment, there's no doubt about it. But I'm always liking to buy gold on a dip. I'm always that way, and I think a lot of viewers understand that. So I think as long as 1250, 1270 holds, I see the metal actually starting to trade high. Towards the end of the year, I would like to see it break back through that 1320 level, and I'll be focused on that. We are in a big range, there's no doubt about it, but when I see where we're potentially going. I think I've got to still be favourable and tip my investments towards the metal.
Jonathan, if you had to choose between the two metals, especially gold and silver, which one are you betting on and what kind of returns are you looking at?
Look, I've always I like silver, there's no doubt about it, but it's sort of come back and certainly come off a lot more than gold and actually holding around these levels. I still like gold over silver, although I know silver has that industrial application. But I guess when I look at both of them in tandem, gold to me is the one that probably outshine, given the fact that we get more US dollar weakness, which is something that I'm tipping.
Well, everybody's buying gold and we hear that on Jonathan as well. But Jonathan, it is festival time and remember, Indian households own something like 22,000 tons of gold and we just seem to be adding on to that year on year. And we are buying here in physical. Would you rather that Indians didn't accumulate so much gold, they bought on paper gold or other asset classes? What's your view when you look at India from outside?
Look, it's part of the festival. So in my mind, there's always a good chance when you can like gold at a good low price, and I think this is where it is. If you look at the ranges which we've been in, and we still feel we're in a super cycle, then this does look like an opportunity. So if I was an investor, which I am, I'd like the metal. If I'm buying it for the festive season, then I think I'd buy a little bit more than I normally would.
All right. I think we've established that gold is going to stay here in my buying list here. But Kunal, coming to you, and how would you look at the metal space? Because whether it is ferrous or non-ferrous, we really seem to be running up onto that one. From lead, zinc, nickel, iron ore, steel prices, everything was trading on the higher side. Which one are you betting on as we start into the next year?
It's a very good question, Manisha. I think what's happening in commodity space, apart from the fundamental, is the US GDP, UK GDP, all these developed economies which were not performing have started to perform well. So we've seen recently the numbers from UK, Europe, even US, they are indicating that the economies have started to heat up. And now going forward, if the US GDP is moving up, the inflation over there is going to move up. And the play what we saw in 2007-8, commodity as a hedge against inflation, that play is coming. So the investment demand for this asset class is going to resume from now. And apart from the fundamentals, I think when the investment demands comes in any asset class, I think it is very bullish trigger. So in case of metals, if the US GDP grows from 2.5 to 2.9 and next year 3.2, then the Chinese exports to US will automatically move up. Chinese economic activity will move up, and that will drive the commodity prices, and that will drive the metal prices. Remember, a lot of these metals are still available at almost 52-week low. One of the best examples is copper. I think it looks very promising to me. 320, 315, good levels to accumulate. Next year, you are likely to see again copper inching back to levels of 350, even though there is a supply glut. Nickel is looking very attractive to me. If European stainless steel mills are coming back in the market and again the production is moving up, I think nickel is a commodity to watch out for. And nickel, we believe that it can test levels of 750 during next year.
All right, so nickel and copper is where you're betting at. But Jonathan, same question to you. The metals have seen a very strong year. It actually has been a year of commodities. When you look back at 2016, we are trading at 5-year highs for zinc and lead, 45% up on iron ore prices. China, of course, has been consuming still on the higher side. So amongst all of these industrial commodities, which one are you picking for the next year now, if you had to pick one?
Well, I'm sort of basically looking at, I guess, two baskets. The industrial commodities, where we're seeing the oil and the iron ore prices, the iron ore prices and the copper prices and also the coal prices, they've all had tremendous rally. Oil in itself has also had a rally, and I think as we lead into OPEC's decision, coming up, that I actually think that oil might have a little bit more of a lift in it. We're around that $50, $52 a barrel. I get a sense that we might get some outcome in terms of the shortcomings, but I'm certainly looking at more demand for the oil picture, so I can see Brent actually starting to hedge higher, probably trade between that $55 and $57 a barrel.
All right. So we actually have all buy calls coming in for the non-agro commodities, whether it is the crude oil, copper and nickel in the metal space, and gold, of course, continues to shine bright as a recommendation for the next year as well. Thank you so much, gentlemen, for joining us and giving us a sense and strategy for the next 1 year now. But with that, it's time for a short break. Next up, we will be joined by MCX MD and CEO Mrugang Paranjpe, and we will also understand from him on where he sees the derivative market and commodities in the next year.